Welcome, everybody, to the Resilient Podcast. My name is Neil Tan. I'll be your host today. Today, we've got fantastic guest, Supreet Kaur from Exalts.
Yes.
So, she is the Chief Operating Officer of Exalts. Welcome to the podcast.
Thank you for having me, Neil.
Yeah, thanks a lot. So, why don't we just kind of kick it off with like a quick introduction of yourself and maybe a little bit about the platform.
Okay. So, Supreet here, uh, it's been a journey of a little close to a year and a half now with Exalts. Me
Right.
and my co-founder starting the company, but
Yeah.
it feels much longer, obviously.
Yeah.
Prior to starting Exalts, I've been a business operator through and through for the last 14 years of my life.
Right.
Running and scaling large businesses and organizations across all of APAC,
Right.
all the way from the corner of the Middle East to all the way to North Asia.
Right.
So that's been me.
Yeah.
Done everything from implementing large scale solutions in blockchain for an organization in Greater China to identifying how do we operate at scale with a firm like Meta, which is multiple platforms and multiple apps along the way as well.
Right. And so tell us a little bit about Exalts. I mean, exactly what is this product, the propositions, the platform itself? Kind of talk a little bit about its history, if you can.
I think I'll talk a little bit more about the genesis because the genesis of it is ingrained in me and my co-founder's DNA of, the 30 years of experience between the two of us that we
Right.
bring to the table. Uh, it I'd say it's been an organic journey where we didn't neither of us got up one day and said that hey, let's build this. I think it's been a culmination of some of those things that happened through our individual careers to a point in us saying that why is nobody really building it out this way, and I'll talk a little bit more about that. So back in 2017, I was implementing blockchain for a large organization across Greater China. And it took, like, I built the entire thing with various consulting partners and technology partners. I moved on from there to Meta.
But
I
17 is super early to be in blockchain, right? I mean, it's
I think given the context of the use case, it was a lot more governed by the rule in mainland China, which was to do with how do you have end-to-end traceability for certain food categories which were susceptible to counterfeiting. So it
right.
was a lot driven around that. But like I realized that it took years for them to implement something, and the same case with my co-founder in terms of he was leading HSBC's global treasury for the last 10 years in Hong Kong, and being close to multiple asset classes, knowing how to unlock securitization or efficiency in some of the asset classes he's trading required the inherent use of blockchain as a technology. But despite having budgets on our respective industries and with ourselves, despite having all the resources in the world, just seeing that it takes years and millions of dollars to get anything moving. And by the time that's done, part of what has been built out is absolutely obsolete from where the technology is. Right. So I think back in 2021, late 2021, the two of us would discuss this a lot. I have to give credit to COVID also for this, that, during this entire period, I was in Singapore, my co-founder was here in Hong Kong. So, it was also a time where due to COVID, we were spending a lot of our individual time on things that we'd probably browsed upon superficially and spending more time on that. But I think where we came to a point was saying that, you know what, when it's large organizations, whether it's a regulated entity like a bank or a large conglomerate in a manufacturing space or consumer goods space or as a large merchant, broadly, what you need in solving any of these pain points is 80% roughly the same. But when you look at what was happening across the market, we saw that either companies were focusing on crypto firms
Yeah.
or they were focusing on building things out for organizations as a service. And we said when 80% of all things are broadly the same, why is nobody productizing this? Yes, 20% of it is going to be nuanced basis, internal processes being varied, the regulatory requirements being varied, what multi companies or multi organizations being involved. But 80% of it can be easily productized.
Right.
So we started shaping that out from there,
Basically,
that,
how to create a standard product, like
exactly, you
80%
can,
standard,
exactly.
20%
So
potentially custom, right? Yeah.
even when cloud infra companies like Azure or
Mm-hmm.
Google Cloud, etc., are have productized things. Either you can just go
Yeah.
buy them off shelf from their websites, but if you're a large enterprise, you can go to them and say that, okay, we need 10% additional customization with this XYZ,
Right.
but 80-90% is still the same.
Right.
Um, and we kind of said that, do we want to just be spectators in this, or shall we build it out? Because between the two of us, we know a lot of large organizations in the tech world, in the financial institutional world. So let's build it out. And that's where the journey started a year and a half back.
Mm.
We are grateful that, Citigroup, US City Ventures, and Accel partners believed in our vision, came on board to back us monetarily and with equity, and that's where the journey started. So
Wow.
it started as a journey of saying that how do we productize blockchain infrastructure in perspective of certain use cases and applications.
Mm.
And that's where the twist began a couple of months later, that when we started going to the same clients, that we knew that, these are the ones who are going to be working with us. We also understood that, while we were always building out the application or the productization of things, they came back to us saying that, what, as a large enterprise, it's not just this. Even to start at this point zero,
Mm.
I need to make decisions around what chain will I use, how is the wallet going to work, how is privacy going to work. So even the setup of things. So we built the layer beneath it as well, which is how do you have the infrastructure to do all the things required to get your blockchain up and running in an interoperable way, because
Right.
that's the beauty of any financial ecosystem, uh, in a single stack. So
Right.
over time, we've partnered with and we are working with multiple EVM chains. So as long as a client wants to use any chain compatible with EVM,
Yep.
they can build it on our infrastructure, and on top of that are multiple use case applications, all
Right.
no code.
Right.
So that's what Exalts is.
Is a tokenization platform primarily focused on EVM, but of course it depends on whatever chains that you're looking at, and that really is driven by the different clients that are inside of it,
Yep.
right? And
Yep.
so when we say tokenization, I mean, what sort of assets are? Of course, we were talking about it earlier, like real world assets. What can you give some examples of the things that you guys have been doing, and what sort of your focal area?
So I'll start with some of the ones where, see, we've started as a company where there's two business operators, and our entire thing was that no matter how great the technology is, if it doesn't solve for a business use case today, it's not going to get adopted. And in
Mm.
some ways, our inspiration was Microsoft Excel. That,
Excel. Okay.
that's a technology that
Right.
we see having seen very mass adoption
Sure.
across enterprises.
Right.
Uh, in a shape and form where, every time you need to set up an Excel sheet, you don't go to your IT admin
Right.
and say that, set this up for me. So it's
Yep.
seen something which is widely adopted, multiple use cases.
Mm.
So we started with tokenization, or no code applications for several asset classes. Some of them are around trade asset receivables, so global trade receivables. They are around asset management. They are around loyalty, so tokenizing loyalty
Mm.
as a financial asset class between merchants and large financial services.
Right.
This will keep expanding over a period of time to more use cases and more applications of what asset class do we want to look at. But the primary thing has been that these are all asset classes which are either hard to securitize today,
Right.
are inefficient in terms of its tradability in some shape or form, or the asset class, sheer by the way it's been formed over decades, is extremely not interoperable at all. Like loyalty,
Mm.
it's not interoperable. You can't use your Cathay points to go to Singapore Airlines, for
Right.
example, or any store in Singapore or Taiwan or wherever.
Right. And then, so when you talk about, let's say, for example, trade receivables, is there a
Hmm.
specific sector that you're focused on inside of trade receivables, or is there a specific sector that you're talking about, like financial products and things like that, or?
So within trade receivables, for example, what we are focused on is how do we use tokenization and blockchain infrastructure to enable large banks, which are typically the issuers of trade loans, to be able to downsell their assets. So this entire thing is around how do you enable banks to optimize their balance sheets within the risk limits that they carry by downselling these loans to asset managers, because these are all great quality
Right.
loans. It's the securitization today which is
Sure.
extremely hard.
Right. So it's basically de-risking their balance sheet in terms of.
It's taking the loans off their balance sheet,
Sure.
so that they can issue more loans.
Right.
So it does a couple of things. It enables banks to, constantly issue more loans and be able to issue loans to more supply chain or trade financing based organizations.
Yep.
But it also enables them to sell these loans as assets to asset managers, to fintech firms globally.
Yep.
And that's the idea there, that there is a pertinent business problem there which tokenization can help unlock.
Right. And then you mentioned a lot about the loyalty piece. I mean, how does that operate, and what sort of loyalty programs? Like, of course, there's like Dairy Farm here in Hong Kong.
Yep.
That's a huge one. Um, what sort of segments are you looking at inside of that space?
So see how loyalty today operates is, we all, I mean, even as individuals, we would
Yeah.
have our own multiple loyalty programs that we would have joined. But there's two issues with loyalty. One is that at the end of the day, most of where we try to optimize loyalty are either airlines or hotels.
That's right.
But we don't, I mean, unless it's you, I don't fly every day. What
No,
I
I know.
do every day is buy grocery, buy coffee, and
That's
all
right.
of those pieces. But do we ever optimize for a grocery store or a coffee shop? No, in terms of loyalty.
Right.
Then the other thing with loyalty is that these are our points which are subject to inflation. Their utility is always which is not interoperable. Now, if you look at this from a bank's perspective, uh, when you very rarely see the coffee shop outside will ever get to go and work with a HSBC or a Citibank with a
Right.
co-branded credit card, right? Because
Right.
how loyalty works today is large financial services firm and a large merchant on the other side, which kind of leaves it to large banks and airlines, hotels. That's it.
Right.
But if we look at where the world is moving, how consumers decide on whether I want credit card A versus credit card B is based on reward utilization and loyalty.
Right.
Which means that what if you start if, and I mean, banks and merchants anyway do look at loyalty as something which is a financial asset. You're talking about what is the way for a large financial institution to be able to work with all the tiny small businesses across all the three islands in Hong Kong, in a way that without having the pain point of I need to build a 200 people partnership team, which is going to be very expensive to go and tie up with every single small merchant to give everyday rewards or something.
Right.
But you do want that loyalty points from A could work at B, B from work could work at A, so that
Sure.
bank one can have a better differentiated credit card or a loyalty
Right.
platform. What you're talking about as loyalty is essentially a financial asset class, which is not interoperable today. It's sort of a currency which is defined by that particular financial institution or the merchant. But how do you make it interoperable in a way that uh, your offering is more differentiated? For most large institutions, large financial institutions anyway, credit cards are a CAC game. That's how they acquire consumers,
Right. Right.
so that they can offer multiple other offerings to them. So how do you make this consumer acquisition game a lot more differentiated versus other large institutions and so
Sure.
on?
Right. And so, as far as your platform is concerned, I guess there are folks that kind of play inside of the technical range. I mean, as far as offering these RWAs, at the same time, there's people that are like completely licensed and they want to create an entire marketplace, and they want to find the buyer seller or the investor and
So
also
they're
the
doing the
issuer, like
distribution as well.
distribution as
Yeah.
well. Like, where do you guys sit inside of this whole
We are
space?
not doing distribution at all. What we are doing is our suite is a suite of no code applications,
Sure.
infrastructure, and APIs.
Right.
So we get integrated into the financial institutions infrastructure. So think of it as an equivalent of cloud infrastructure that uh, we sit in the infrastructure for the banks. Our marketplaces will we build the give the infrastructure for to financial institutions and other large conglomerates to have their own marketplaces.
Right.
We are not in the distribution game, and there's a very strong reason why we said I like if I'm going to be working with large institutions, why should I get into the distribution game where I'll start competing with them? That's
Sure.
not my forte.
Right.
My forte is in understanding how do large organizations work and knowing that what are broadly those 80-90% requirements which are going to be the same across bank A in Singapore versus bank B in UK versus
Right.
bank C in Hong Kong,
Sure.
so that that can get productized. There's no point of me getting into distribution because that's something that large institutions have worked decades on in building that out.
Sure. Right. So you're actually providing the stack
Yes.
and the platform so that people can facilitate that trade in a legal, compliant, and regulatory
Yep.
way. And so how do you customize, or to what extent do you customize? We were
We
talking about that,
yeah,
so
yeah,
I
yeah.
just want you to,
We
yeah.
do customize. See, it's also couple of things. One is the first set of anchor clients that we have across each of our use cases.
Mm-hmm.
Uh, it's a co-building exercise, and we've been very cognizant that we are going to take that approach where we know what those 80% things look like. The 20% we will understand from them. Out of that, maybe 5 or 6% is going to go into the core stack itself. The remaining things will always remain a little bit customizable, and that's also where our fee model or revenue comes in. That it's
Sure.
licenses for the productized stack plus additional fee for the customization. So we do customize, but we also know that we are also cognizant that customization cannot take the amount of time it takes in large institutions today, which is, spend 5 years and $25 million. So we are a fraction of that, both in time and
Right,
cost.
right. So maybe changing gears a little bit. I mean,
Yes.
your personal sort of journey, how did you end up in this sort of path, right? Because you were telling me that you're like an engineer. I mean,
Yeah, engineer
I
by
mean,
education.
yeah,
Yeah.
by education. I mean, like that's pretty hardcore considering your background and everything like that. So maybe you can talk a little bit about your personal journey and how you came along inside of this whole space. So,
So I'm an engineer by education, but I also did a master's in after that in business.
right, okay,
That's where my journey began of never coding and only
okay,
understanding the
and
basics of
then
engineering, but getting directly into the business realm when I started my career
right,
ages ago.
right,
Uh, but it's been a journey of essentially, I started my career in an organization I still truly admire, Procter.
okay.
Um,
Procter and Gamble,
Procter and
right?
Gamble,
Yeah,
the
right,
largest consumer products good in the company in the world.
right,
Um, Again, scaling businesses, operating a region, scaling and identifying new channels of distribution and growth for the company.
right,
Uh, to being in Southeast Asia and leading a regional business, looking at mergers and acquisitions
right,
and all of those pieces. So I've been a business operator through and through. It's been
right.
a mixed set of all things, which I think the natural culmination of it was becoming a founder and doing this on a daily basis,
And try,
and
right, giving it a shot at the title
with
kind
a
of thing,
lot of
right?
context switching
Yeah,
throughout the day.
right. And then, so, when you were at P&G, I mean, you were in a technical role or
No, I
you were
was in a
still a
business role.
business role,
Yep.
right? And then, for women at that time, was that opportunity quite prevalent, or was it like you were just kind of like making your own way, if you will, right?
I started my career with PNG in India,
Okay.
and there were not a lot of women in the business side
Right.
of roles, especially sales and channel distribution, etc. But honestly, haven't thought of it that way. I come from an education background where anyway there's less than 10% women in
Oh,
your education itself. So I think
wow.
you get used to seeing rare women around you. That of course changed when I moved to Southeast Asia,
Right.
where there's of course a lot more women in workforce. There's a
Mm,
lot more women, especially on the business side of roles as well.
right.
But yeah,
Yeah. So I mean, it was maybe just kind of changing the environment, changing the geographies, and then you had a little bit more exposure inside of it. And so, in your sort of journey in the startup situation, of course, there's probably some areas that you had to pivot how can you talk a little bit about how the business, how you started and how you're at today, like you know going through the kind of pivoting situation there.
So I think we've had one tiny pivot in terms of our roadmap
Yep.
and one additional incremental piece that got added to our roadmap. So when we started our journey, part of our roadmap was around first building out the product itself instead of the stack, and then going on to the stack. But I think what we realized over a time was that one, building out the stack in a productized way is what makes more sense. So we flipped around the roadmap a little bit that way. And the other was, as I was talking to you about it, that, what we had started building out, even from a stack perspective, was these no code tokenization applications for institutions. But when we started going into those final conversations on getting some of those anchor clients in, we realize that, what, even if we start this with them, they can't get started till they figure out everything else beneath them, because even how blockchain infrastructure has been built today is not keeping in mind large institutions at all. So we built that out as an additional piece, which is the underlying infra.
Right.
I'll give you an example to make this more vivid.
Yeah.
So think of how wallets are created in the blockchain ecosystem today. You're supposed to remember your private keys at all point of times. You cannot lose them no matter
Seed
what.
phrase, all that.
But if you think of organizations, yes, the IT administrator is supposed to ensure that the server doesn't get hacked. But in a large organization of whatever, 50,000 people, I'm sure 1,000 people forget their email passwords every single day and they just go get it reset. But how the blockchain infrastructure works today is that all 50,000 of them are supposed to remember their private keys at all points of time, never forget them. That's not how organizations work.
Right.
Two, it's also set up, how infrastructure was set up today is also that this is your key and Neil's key alone.
Yeah.
But people leave organizations, they take up new jobs, they move different functions, they
Yeah.
move different regions within the same global company. What happens then?
Right.
Then, when you or I send emails, we don't pay a internet usage fee to our companies or an electricity fee for this, but the how the blockchain infrastructure is set
Gas
up
fee.
today is there's gas fee.
Right.
So what we said was that all of these things exist, but none of these are designed from an infra point of view, keeping in mind that organizations are just a large group of people. People move, people forget their passwords,
Yep.
an organization pays for its utility bills at a central level. So we kind of redesigned the infrastructure in a way that organizations can function. Now, what this means is that our wallet as a service or our wallet part of our infrastructure operates how organizations work. Somebody as an IT admin or somebody will still have to set up the entire thing the same way somebody would have set up cloud infra for a company years ago or something. But people can forget their passwords
And you can
and
do
not pay gas
recovery and all
fees.
those different things, right? I mean,
Correct.
everybody can do recovery and so
Correct.
forth.
Correct.
Right. That's the
So
difference.
then, and that's what I was telling to you about even before the
Right.
podcast, that
Right.
our ethos is in understanding that when you're building for organizations, it's very different from building for retail consumers.
Right.
So how do you build this out, keeping that DNA so much in mind that it can be productized at scale?
Right. Yeah. Standard versus custom,
Correct.
and
Now, what
obviously
will
training.
differ in this is maybe in company A, 10 people need to do additional 5 levels of access versus company B. And that's where the no code piece comes in, that our infrastructure is set up in a way that you can just drag and drop and say, okay, I need access levels for 5 more people, I need access levels for 3 less people,
Sure.
and so on and so forth.
Right.
That's where that comes in, that it's 80% broadly the same product.
Right.
20%, maybe 10% of it organizations can customize on their own, and the rest 10% we can do it with them as a part of the entire onboarding and getting into things.
Right. So when you kind of look at it, it's like, so what are like sort of the key learnings from, I guess, the last couple of years? You bumped your head against the wall a few times here and there. I don't know. I mean, maybe you can share like what you learned through this process, and maybe you can share it to other entrepreneurs what they could take away from this, right?
I think one thing we've learned through the process is that it's very easy to get distracted in our world,
Right.
especially when, every single asset class looks like has a size of price of a couple of $1 trillion. So it's
Right.
very easy to get distracted in saying that let's also start building for this. I think one thing we've learned is that focus is easier said than done. So to keep that laser sharp focus is something you need to remind yourself of every day. And I think that's also where it helps that both of us as co-founders keep reminding each other that okay, let's focus on these four to begin with, and we'll keep doing more. So I remember when we were forced to make her website because we had to announce her seed round last year. Uh, we started with these 25 use cases, and then we said that okay, this is way too much. Let's cut it down.
Right.
We cut it down to 9, and then we cut it down to saying okay, let's be very very ruthless about prioritizing things. So I think the biggest learning for me has been being absolutely ruthless and focused on what you're building, because it's very very easy to get distracted.
Right. Do you think that you could do this on your own, or do you think that you would, you know, better to have co-founder, or like if you started us all? No, no offense, Ash, but but you know, what's your view? I mean, there's some people that are like sole, some people are
Yeah,
co-founders. Well,
yeah.
maybe there's even like teams of like
Yes.
co-founders, like
Yeah.
3, 4, or 5 of them. Like, what's your general feeling? Because sometimes it goes well, sometimes it doesn't. I mean, we don't know until it happens. But
I mean,
I'm
I've
just
seen success on both pieces. I've seen people who are great solo founders. I think in our case, both of us are very complementary to each other. And because we've known each other since more than a decade as friends, it's also inherent trust. So I think that goes a long way, especially when you're building a business and an organization, to have those complementary skill sets at every point of time, to also be able to take on each other's work as and when needed. I don't think there's a right or wrong answer to this, but I don't think I would have done this without Ash, and I'm hoping his answer is the same.
this is like split them in 2 different rooms and ask them the same question
Yes.
and see what happens. That's cool. So when you went to do your fundraising, maybe you can talk a little bit about the fundraising process and what your experience was. Is obviously every entrepreneur is like has gone through it or has knocked on a lot of different doors, heard no many 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 times, right? I mean, what was your experience? What are some of the learnings, and then what can they do better? In that sense.
I think one thing we had done was, before we actually started speaking to venture capitalists,
Yeah.
we spoke to some of the senior leaders who we had admired in both of our careers. We spoke to founders of very large organizations, and we also spoke at length a lot to organizations and people who would have become our clients later.
I see.
And what that helped us do was, and we were very, very, clinical about asking them and providing ruthless feedback and ripping every single thing that we are saying completely apart, and
Right.
not being nice to us in that
Right.
process.
Right.
But I think what that did was that it ensured that we are not thinking of things in an echo chamber, because sometimes it's very easy to get lost in that echo chamber when you're so close to what you've been building for several months. Um, so we went to, I think in preparation side of things, we only started the process of going out and reaching out to some venture capital firms when we had done that entire, pull everything out,
That's
dig out
almost like
every
product
hole.
market fit in that sense because you're talking
Correct.
to potential
Clients
clients.
as well.
Right.
Yes,
Right. Right.
yes. So I think the second part of it was because of the first part of what we did in terms of prep. The second part of the actual raise was easier.
Easier.
Yes.
Interesting.
And I mean, I think we are very, very grateful. I can't find wood here, but we are very, very grateful to both Accel and Citi, and being believing in our vision, and us as individuals very early on in the process of raising capital. Um, of course, given one of them is a bank, the due diligence process took much longer, but
Right.
that's part and parcel of, when you're working with banks, either on your cap table or as clients as well.
Sure. Right. Yeah. I mean,
But
I
I
can
think
imagine.
we've been lucky in that perspective with regards to a raise, and very very grateful to very marquee firms and very fabulous
Oh, yeah. I
individuals.
mean, that's like a stellar lineup, right? I mean, that's
Yes.
very few have that type of credentials. So, kind of looking forward, obviously tokenization is top of mind. I mean, where do you see the market, moving? And, in terms, I mean, you've really been in multiple jurisdictions, right? I mean, multiple geographies and so
Yep.
forth. So you have a very good understanding of Middle East, Southeast Asia, Greater China, and so forth. Like, what's your view in terms of the development across these different jurisdictions? What sort of key trends do you see coming out of them? And it must be presumably different in each one. What's the flavor for each,
So
right?
I think each of these jurisdictions that we have significant presence in, starting from west to east being UAE, Singapore, and Hong Kong, each of the regulators and large financial institutions across each jurisdiction have a very pioneering view around how do they leverage tokenization and blockchain as a technology. Um UAE has announced, what do they do with CBDC and wholesale CBDC. Um MAS is in Singapore is also, working on multiple pilots and use cases. Hong Kong just had the first digital bond issued by Goldman Sachs and EHKD, which we also saw last week in the FinTech Week as well, the hypothetical EHKD. So I think what's definitely there as a pattern across each of these three jurisdictions and more as well in EU and in Europe and US is that there is no question of if blockchain or if tokenization. The only question is now how do we get this working for us?
Mm,
Uh, which is where that build versus buy ends up happening. That what a lot of banks and financial institutions have done over a period of time is spend their time and effort on build, which is
right.
first pay a consulting firm millions of dollars to write a paper or a report, then identify internal headcount and internal budgets, then spend another couple of years in building something out. I think what we are seeing across the board now is a very high degree of openness in saying build does not necessarily work, which is where we are seeing across the three jurisdictions the regulator, the central banks, and the regional global banks very, very willing to partner with fintech firms, startups like us who come with a background of having always worked and spent a life in enterprises,
Right.
being backed by enterprises like Citi,
Right.
and saying that okay, how do we do this together so that the speed to market is a lot more accelerated.
Mm,
The spend on resources and time and bandwidth is a lot lower because we are all living in a time where money is no longer free. So, how do you get by to solve that solution? A very different example. It's like people thought of, going back to Excel.
yeah.
No organizations thought that, okay, you know what, I want to use Excel for this particular use case internally, so let me start building Excel.
Yeah.
Everybody said, let me buy Excel licenses, but I'm going to write my own macros, I'm going to write my own internal programs to work with it, my own integrations, right? But nobody said, let me start creating Excel from zero.
Mm,
Same thing. Nobody said, when people started working in a hybrid way, nobody said, okay, let me build Zoom from the beginning. People bought Zoom
right.
licenses. They,
Right.
of
Right.
course, had their own internal integrations,
Right.
certain customizations on access, and so on and so forth. But nobody started saying that, let me build my own Zoom from the scratch, from
Right.
scratch. And that's what we are also seeing across jurisdictions on all things blockchain and tokenization, that okay, we've spent enough money and years trying to do this on our own, let's partner with organizations and companies which are doing this and look at it as an approach of buy instead of build.
Right.
So
Right.
that's the commonality. Of course, the use cases, how they're approaching things are very different, which is a function of how deeply is each of these jurisdictions involved in global capital markets? What are some of the key roles that they play in global capital markets? and so on. So that will always vary, but that's the top layer of what we are building, which is the applications. The infra will be the same.
Right, right. So yeah, I think it's fantastic what you guys have been able to accomplish in the last couple of years. I mean, it's only
One
been
and a half
yeah,
years.
1.5 years. It's like pretty amazing. So yeah, is there any other things that you'd like to kind of share about the experience as an entrepreneur, or being inside of the not inside of the RW,
Blockchain.
yeah, inside of the blockchain space? Any key learnings?
I think my learning is maybe less to do with tokenization or blockchain, but more to do with just the fact that I think it's entrepreneurship is something very organic. I don't think anybody wakes up one day, at least I
You
didn't wake
didn't.
up one
You
day and say
weren't
that
like.
now I'm going to be an entrepreneur. I think it's very
Right.
organic as a journey.
Yeah.
And the best thing to be doing is leveraging everything that you've learned through your life in building it out. So our ethos is purely enterprise, whether it's financial institutions, certain large global conglomerates that we are working with,
Right.
in saying that, hey, this is the world we understand the best. We speak the same language. We've spent years and years in this world.
Right.
So let's build for the world that we understand instead of something that we don't, because this is our playground to win and play in.
Awesome. Thanks so much, Supreme. I mean, I really appreciate the time that you've spent with us, and safe travels going forward. So thank you.
Thank you, Neil. Very, very happy that you welcomed us on this podcast.
Yeah, thank you.
Thank you.